I think you have to be honest with yourself about inflation these days. There are significant disinflationary pressures around the world, and there have been for a while, and they persist today. It's not going to be easy to have inflation move up, and it isn't going to be just a question. It's going to take some time. It took a long time to get inflation back to 2% in the last crisis, and we're honest with ourselves and with you in the SEP that even with the very high level of accommodation that we're providing both through low rates and very high levels of asset purchases, it will take some time because that's what we believe the underlying inflation dynamics are in our economy. And that's sort of one reason why we're concerned about inflation is that we see that, and that's why we have adopted the flexible average inflation targeting framework. That's why we're aiming for an overshoot. But we're honest with ourselves and with the public that it will take some time to get there. In terms of, would it really speed it up a lot to move asset purchases? I don't think that would really be. I think it's going to take a long time, however you do it. And we've been having very long expansions since in the last several decades because inflation has not. The old model was inflation would come along and the Fed would tighten and we'd have a recession. Now, inflation has been low, and we haven't had that dynamic, and the result has been 3 of the 4 longest expansions in modern history, in recorded history. So, we're thinking this could be another long expansion, and that we'll keep what we're saying is we're going to keep policy highly accommodative until the expansion is well down the tracks, and we're not going to preemptively raise rates until we see inflation actually reaching 2% and being on track to exceed 2%. That's a very strong commitment, and we think that's the right place to be.